You know what the most dangerous thing on Wall Street is right now? It's not inflation. It's not interest rates. It's not even the geopolitical chaos you see every day on the news. The most dangerous thing on Wall Street right now is a name. SpaceX. Because that name, that one single name, is about to trigger the biggest wealth transfer in a generation. And I mean that literally. Trillions of dollars are going to move. And 95% of the people watching this video are going to be on the wrong side of that transfer. I've been around long enough to have seen this movie before. I watched it in 1999 with the dot-com bubble. I watched it in 2004 with Google's IPO. I watched it in 2012 with Facebook. And each time, the same thing happened. Millions of ordinary investors lined up, checkbooks in hand, hearts full of excitement, and they handed their money to the insiders who were already rich. I don't want that to happen to you. So today, and I want you to stay with me for this entire conversation, because the most important part comes near the end, I'm going to tell you about a $15 stock. A company most of you have never heard of. A company that, in my view, has a better risk-adjusted chance of making ordinary investors genuinely wealthy from the SpaceX era than SpaceX itself. Not because it's sexier. Not because it has a famous founder. But because of a pattern I've watched repeat itself, quietly and reliably, for over 70 years of investing. The pattern is simple. In every great gold rush in history, it's almost never the miners who get rich. Let me show you what I mean. 1849. California. Word spread, there's gold in the hills. And what happened next was one of the greatest human migrations in American history. 300,000 people dropped everything. Their jobs, their families, their farms, and rushed west. Doctors became miners. Teachers became miners. Preachers became miners. And almost every single one of them went broke. Not because gold wasn't there. Gold was absolutely there. The gold was real. But here's what they didn't understand. Finding gold is extraordinarily hard. And even when you find it, getting it out of the ground, transporting it, selling it, at every step, someone else takes a cut. But there was a young man from Bavaria who looked at those 300,000 desperate miners and saw something different. He didn't see a gold rush. He saw 300,000 men who needed pants. His name was Levi Strauss. He didn't dig for gold. He didn't stake a claim. He sold the miners durable denim pants. And he made a fortune that outlasted every miner who ever swung a pickaxe in those hills. Now here's what I want you to sit with for a moment. Levi Strauss didn't need the miners to find gold. He just needed them to keep looking. That distinction is everything. Because right now, in 2025, we are standing at the edge of the greatest space gold rush in human history. And I mean that without a single ounce of exaggeration. SpaceX has done something genuinely extraordinary. By dramatically reducing the cost of launching things into orbit, what Elon Musk has built with reusable rockets is the equivalent of inventing a cargo ship that can sail itself back home after every delivery. The economics of space have been transformed. Permanently. What used to cost $10,000 per kilogram to put into orbit now costs under $2,000. That is an 80% cost reduction. And if you understand anything about business history, you know that when the cost of moving something drops by 80%, new industries don't just emerge. They explode. The railroads didn't just move people faster. They created Chicago as a city. They made refrigerated beef a nationwide industry. They made the American West inhabitable. One infrastructure breakthrough. 10,000 downstream businesses. That's what's happening in space. Right now. Today. And that means, just like in 1849, the real money won't be made by the people chasing the rockets. It'll be made by the people selling what the rocket builders need. Now let me tell you about SpaceX. Because you deserve an honest picture. SpaceX is, without question, one of the most extraordinary companies ever built. I don't say that lightly. I spent decades studying businesses. I've seen thousands of them. And what Elon Musk has accomplished, building reusable rockets from scratch, building Starlink, preparing missions to the Moon and Mars, it's genuinely, historically remarkable. The valuation numbers floating around, $1.5 trillion, $2 trillion, for what SpaceX could eventually become. In my view, Those aren't insane numbers. They might even prove conservative if Starlink becomes what its supporters believe it will, essentially the internet provider and mobile network for the entire planet, including the 4 billion people who currently have no reliable connectivity whatsoever. That is not a small idea. That is potentially the most valuable business idea in the history of commerce. So why am I telling you not to bet your retirement on SpaceX's IPO? Because there's a difference between a great company and a great investment. And Wall Street profits enormously by making sure ordinary investors don't understand that difference. Here's what happens at every major IPO. And I've watched this play out more times than I can count. The company goes public at a price that already reflects, and usually exceeds, what rational analysis suggests it's worth today. Not because the company isn't good. Because the bankers and insiders who structure the IPO are very, very good at their jobs. Their job is not to make you rich. Their job is to get the maximum possible price for the people selling shares. By the time you click buy on your brokerage app at 9:35 in the morning on IPO day, the early investors, the venture funds, the private equity firms, the angels who wrote checks when SpaceX was a dream in a warehouse in Hawthorne, California, those people have already made their 50 times. Their 100 times. Their 200 times in some cases. The IPO is not the beginning of the SpaceX story for those people. It is the ending. A very, very profitable ending. And you are being invited to pay for their exit. Now add the lockup period. Here's something your broker will almost certainly not explain to you before you hand over your money. When a company goes public, the founders, employees, and early investors are legally prevented from selling their shares, typically for 6 months. Because if everyone could sell immediately, the stock price would collapse from the sheer volume of selling. So regulators require a waiting period. But here's what that means for you. For those 6 months after the SpaceX IPO, the only people selling shares are ordinary investors like you, who bought at or near the IPO price. And then, on the day that lockup expires, month 6, a dam breaks. Billions and billions of dollars in paper gains that have been locked up for years, sometimes decades, suddenly become sellable. And human beings who have been watching their net worth locked up for a long time, they sell. Not all of them. Not all at once. But enough. I've seen this movie with Uber. I've seen it with Lyft. I've seen it with Rivian. Great companies, or at least compelling ones, where the people who bought on IPO day are still waiting to break even years later. I'm not saying SpaceX will follow that path. SpaceX is fundamentally a better business than most IPOs. But when you pay $2 trillion for something, everything has to go right. Nothing can go wrong. And in business, something always goes a little wrong somewhere. So here is the question I want you to hold in your mind for the rest of this video. If the SpaceX gold rush is real, and I believe it is, and if the miners rarely get rich from a gold rush, and history shows they don't, then who is Levi Strauss in this story? Who is selling the pants? I want to introduce you to a company trading right now at approximately $15 a share. The company is called Rocket Lab USA. The ticker symbol is RKLB. Now before I go further, and I want to be very clear about this because I genuinely mean it, I am not your financial advisor. Nothing I say today is a recommendation to buy or sell any security. Investing involves real risk. You can lose money, including all of it. What I'm sharing with you is perspective and research, not advice. Please do your own homework. That said, let me tell you what I see. Rocket Lab was founded in 2006 by a New Zealander named Peter Beck. For years, the company was virtually invisible to mainstream investors. While everyone watched SpaceX with its dramatic launches and famous tweets, Rocket Lab was quietly, methodically building something that the entire space economy desperately needs. Reliable, affordable, frequent access to space for small payloads. Their rocket, called Electron, is the second most frequently launched orbital rocket in the world. Not in New Zealand. Not in the Southern Hemisphere. In the world. Second only to SpaceX's Falcon 9. Read that again. Second only to SpaceX. They have launched over 50 missions. Their customers include NASA, DARPA, the National Reconnaissance Office, the Classified Spy Satellite Agency, commercial satellite companies, and defense contractors. These are not speculative future customers. These are real organizations writing real checks right now. But here's what makes Rocket Lab different from every other small launch company, and why I think it represents the most interesting opportunity in the public space market. They are not just a rocket company. Rocket Lab has been quietly building an end-to-end space business. They design spacecraft. They manufacture satellite components. They provide mission management services. They are building a medium-lift rocket called Neutron, which will allow them to compete in a much larger segment of the market, and they have been funding that development largely through their existing, operating, revenue-generating business. They are not burning investor cash on a dream. They are building a real business, generating real revenue, using that revenue to invest in growth. In fiscal year 2024, Rocket Lab generated over $400 million in revenue. That number grew over 70% from the year before. 70%. The backlog, meaning contracts already signed for future work, is over $1 billion. Now here's where I want to take you deeper. Because the revenue is interesting. But it's not why I think Rocket Lab could be one of the biggest winners of the SpaceX IPO era. It's the strategic position. Think about what happens the moment SpaceX goes public. Instantly, every institution in the world, every pension fund, every sovereign wealth fund, every university endowment that has been saying we need space exposure in our portfolio suddenly has the most obvious way to get it. They buy SpaceX. But here's the thing about institutional money. It doesn't go into one stock. It goes into sectors. When a sector becomes investable, when there's a marquee name that legitimizes the whole space, the money flows across the sector. We saw this with electric vehicles. When Tesla went on its massive run in 2020, it didn't just make Tesla shareholders rich. It pulled up every EV-adjacent company, battery manufacturers, charging infrastructure companies, mining companies that supply lithium. The rising tide lifted boats that most retail investors had never even heard of. The SpaceX IPO will almost certainly do the same thing for the space sector. And when institutional money starts scanning the public markets for space companies with real revenues, real contracts, real technology, and reasonable valuations, Rocket Lab is going to be on that list. At $15 a share, and please check the current price before you do anything, the market is valuing Rocket Lab at roughly $3 to $4 billion. That is less than 0.3% of SpaceX's rumored valuation. For the second most active orbital launch provider on the planet. I'm not telling you that gap is obviously wrong. Valuations are complicated. But I am telling you the gap is worth examining. And I am telling you that patient investors who did their homework on names like this, before they became household names, are the people who tend to look very smart 5 years later. But Rocket Lab is only the beginning of what I want to share with you today. Because here's what I've learned over 7 decades of paying attention to how wealth actually gets built. The biggest opportunities are rarely in the most obvious place. Everyone is looking at the rocket. Almost nobody is looking at what the rocket needs. Every satellite launched into orbit needs power, solar arrays to generate electricity. Every satellite needs the ability to propel itself, thrusters, propellant systems, attitude control. Every satellite needs to communicate, antennas, radio frequency systems. And as the satellite population in orbit grows from a few thousand today to potentially hundreds of thousands over the next decade, the demand for these components is going to be extraordinary. There's a company called Redwire, ticker RW, that I want to mention briefly, not as a recommendation, but as an example of the kind of business worth examining. Redwire manufactures solar arrays, antennas, robotic systems, and even has manufacturing technology that works in the zero-gravity environment of space. Their equipment is operating right now on the International Space Station. They have printed objects in orbit. These are not future promises. This is current technology. A second company worth examining, again, research not advice, is Intuitive Machines, ticker LUNR. They built and landed a spacecraft on the Moon in February 2024, the first American spacecraft to successfully land on the lunar surface in over 50 years. Under NASA's Commercial Lunar Payload Services program, They are being paid to deliver cargo to the moon. Not to demonstrate technology. To deliver cargo. That's a business. Now I want to be absolutely clear about something. These companies, Rocket Lab, Redwire, Intuitive Machines, are not Coca-Cola. They are not See's Candies. They don't have 50 years of predictable earnings. They are operating at the frontier of what is technologically possible, which means things will go wrong sometimes. Missions fail. Contracts get delayed. Government budgets get cut. If you cannot stomach the possibility of losing everything you put into a position, and I mean everything, not just half, then the sizing is wrong. For most people, keeping the total space sector allocation to 3 to 5% of their overall portfolio is sensible. Enough that if it works, it meaningfully matters. Small enough that if it doesn't, your financial future survives. What is happening in space right now is not a stock market story. It is not a theme. It is not a trend. It is not a sector rotation. It is one of the genuine technological transformations of human civilization. And I choose those words carefully. Think about what SpaceX has actually accomplished. By driving launch costs down by 80% over the past 15 years, they have done for space what the interstate highway system did for American commerce in the 1950s. They have made the infrastructure accessible. And when infrastructure becomes accessible, industries that were previously impossible become inevitable. Starlink alone, the idea of providing reliable, high-speed internet to every human being on Earth, including the 4 billion who currently live without meaningful connectivity, represents both the largest business opportunity and one of the most genuinely humanitarian projects in history. Those two things don't usually go together. When they do, it tends to create something very special. But beyond Starlink, think about manufacturing in zero gravity, where you can create materials that are physically impossible to produce on Earth. Think about Earth observation at a resolution and frequency that transforms agriculture, disaster response, insurance, and military intelligence simultaneously. Think about the early stages of asteroid resource extraction, which sounds like science fiction until you look at the actual composition of known near-Earth objects and do the math on what the metals in a single moderate-sized asteroid would be worth. I am 94 years old. I have watched a lot of transformational moments from close range. The rise of American manufacturing in the post-war era, the railroad and highway build-out, the early days of television and aviation, the personal computer, the internet. Each of those moments had the same characteristic in common. There was a brief window, not years, but a brief window, where patient, disciplined, informed investors could position themselves ahead of the institutional money. Before the mutual funds and the pension funds and the endowments fully appreciated what was happening. I believe we are inside that window right now. For space, I don't know how wide the window is. It could be years. It could be shorter. But I believe it is open. And the SpaceX IPO, when it comes, will almost certainly close it. Because the moment SpaceX is publicly traded, every institutional investor in the world gets cover to allocate to space. And when that happens, valuations across the sector will reflect the institutional view of the future, not today's uncertainty discount. The time to buy the picks and shovels is before the miners arrive, not after. The biggest risk in investing has never been the investment. It's the investor. It's buying something because you're excited about it without actually understanding what you own. It's putting in more money than your situation can genuinely absorb. It's panicking when prices fall, and in speculative sectors like this, prices will fall, sometimes dramatically, and selling at exactly the moment you should be holding or even buying more. And it's chasing the excitement of the story without doing the unglamorous, boring work of understanding the business underneath. Every company I've mentioned today deserves real homework before you put a single dollar into it. Read their earnings reports. Understand where the revenue comes from, and where it doesn't. Ask yourself, what has to be true for this business to be worth significantly more in 5 years than it is today? Then ask yourself, what could go wrong? Not in a dismissive way, really think about it, and ask yourself whether you could handle it, financially and emotionally, if it did. The space economy is real. The opportunity is real. But the discipline required to actually benefit from it, The patience, the research, the emotional steadiness when things get volatile. Those things are just as real. And nobody can give them to you. No video can give them to you. You have to bring them yourself. Here's what I will tell you plainly, as someone who has watched a lot of ordinary people make a lot of financial mistakes, including, in my younger years, myself. The people who will look back in 10 years and feel good about what they did with the space economy, they are not going to be the people who rushed in because of excitement. They are going to be the people who took a breath, who did their homework, who sized their positions sensibly, who stayed patient while everyone around them was being noisy, and who understood the difference between a great story and a great investment. The Levi Strauss of the space economy is already out there. Probably several of them. Trading at prices that reflect today's uncertainty, not tomorrow's reality. Your job, if you choose to do it, is to find them. Not because I told you to, but because you did the work. You understood what you owned. And you had the conviction to hold it while others panicked. That's how wealth gets built. It's the same way it's always been built. Now go do your homework.